Rich Dad Poor Dad, Book Summary. Hey everyone, welcome back to my channel where I share with you the best tips and tricks on personal finance and investing. In today's video, I'm going to talk about one of the most influential books that changed my life and my perspective on money, Rich Dad Poor Dad by Robert Kiyosaki. Rich Dad Poor Dad is a book that tells the story of a boy with two fathers, one rich and one poor, and how they influenced his views on money and investing. The book contrasts the different mindsets and financial habits of the rich and the poor, and explains why financial literacy, financial independence, and investing in assets are essential for building wealth. What is wealth? When people talk about wealth, they often mean having enough money and resources to buy the things they need and want, like a comfortable home, good food, and nice clothes. It can also mean having the ability to enjoy experiences like going on trips, playing sports, or learning new things. The book is divided into 6 lessons that the author learned from his rich dad, who was his best friend's father and a successful entrepreneur. These lessons are: Lesson 1, the rich don't work for money, they make money work for them. This means that the rich understand how money works and how to use it to create more money. They don't trade their time for money, they create passive income streams that generate money even when they sleep. They also don't let fear or greed control their decisions, they have a clear vision and a plan to achieve their goals. In this lesson, you will learn how to overcome your limiting beliefs about money, and how to develop a millionaire mindset that will help you attract more wealth into your life. For example, instead of saying "I can't afford it," say "How can I afford it?" Instead of working for a paycheck, work for profits. Instead of saving money in a bank account, invest it in assets that will grow in value. Lesson 2, why teach financial literacy? Because it's the difference between an asset and a liability. Financial literacy is the ability to understand how money works and how to manage it effectively. It's also the ability to distinguish between an asset and a liability. An asset is something that puts money in your pocket, while a liability is something that takes money out of your pocket. The rich focus on acquiring assets, such as businesses, stocks, real estate, or intellectual property, while the poor and the middle class focus on acquiring liabilities, such as cars, clothes, or gadgets. In this lesson, you will learn how to identify and acquire assets that will generate passive income for you, and how to avoid or minimize liabilities that will drain your cash flow. For example, instead of buying a new car that will depreciate in value and cost you maintenance and insurance fees, buy a used car that will serve your needs and save you money. Instead of buying clothes or gadgets that will go out of fashion or become obsolete, buy books or courses that will increase your knowledge and skills. Lesson 3, mind your own business. Focus on building your own assets instead of working for someone else's. Many people think that their job is their business, but in reality, their job is their employer's business. They work hard to make someone else rich, while neglecting their own financial future. The rich mind their own business, which means they focus on building their own assets that generate income for them. They also pay themselves first, which means they invest in their assets before paying their expenses or taxes. In this lesson, you will learn how to mind your own business by creating your own sources of income, and how to pay yourself first by prioritizing your investments over your expenses. For example, instead of working for a company that pays you a salary and takes a cut of your profits, start your own business that pays you dividends and gives you full control over your profits. Instead of paying your bills and taxes first and then saving what's left, save and invest a portion of your income first and then pay your bills and taxes with what's left. Lesson 4, the history of taxes and the power of corporations. How to use legal entities to protect your wealth and pay less taxes. Taxes are one of the biggest expenses that people have, and they can eat up a large portion of your income. However, taxes are not the same for everyone. The rich use corporations as legal entities to protect their assets and reduce their tax burden. Corporations can deduct expenses such as salaries, travel, entertainment, or education before paying taxes. They can also reinvest their profits into more assets without paying taxes. The poor and the middle class pay taxes first and then spend what's left on their expenses or liabilities. In this lesson, you will learn how to use corporations to your advantage by creating legal structures that will shield your assets from lawsuits and taxes. For example, instead of owning your assets in your own name and exposing them to creditors or tax authorities, own them in a corporation or a trust that will protect them from legal claims or tax audits. Instead of paying taxes on your personal income, pay yourself a salary or a dividend from your corporation. And pay lower taxes on your corporate income. Lesson 5: The rich invent money. How to create opportunities and leverage other people's money to invest. The rich have a different mindset when it comes to money. They don't see money as a scarce resource that they have to compete for. They see money as an abundant resource that they can create and multiply. They also don't rely on their own money to invest. They use other people's money, such as banks, investors, or partners, to leverage their returns and minimize their risks. They also look for opportunities where others see problems or challenges. In this lesson, you will learn how to invent money by creating value for others and how to leverage other people's money by using debt wisely. And forming strategic partnerships. For example, instead of waiting for money to come to you, create money by solving a problem or fulfilling a need for someone else. Instead of using your own money to buy an asset, use other people's money to borrow or raise funds and use the asset's income to pay them back. Instead of doing everything by yourself, partner with someone who has the skills, resources, or connections that you need and share the profits. Lesson 6: Work to learn, don't work for money. How to develop your skills and knowledge to become financially intelligent. The most important asset that you have is not your money, but your mind. Your mind can help you create more money or lose it all. That's why you need to work to learn, not work for money. You need to develop your skills and knowledge in areas such as accounting, investing, marketing, sales, law, or leadership. These skills will help you become more financially intelligent and successful. In this lesson, you will learn how to work to learn by seeking mentors, reading books, taking courses, or attending seminars that will enhance your financial education. For example, instead of working for a job that pays you a fixed salary and limits your growth potential, work for a job that teaches you valuable skills and gives you opportunities to advance your career. Instead of reading novels or magazines that entertain you but don't educate you, read books or articles that teach you something new or challenge your thinking. Instead of taking courses or seminars that are boring or irrelevant, take courses or seminars that are interesting and relevant to your goals. So these are the 6 lessons from Rich Dad Poor Dad that I want to share with you today. I hope you found them useful and inspiring. If you want to learn more about this book or get a copy for yourself, I'll leave a link in the description below. And if you enjoyed this video, please give it a thumbs up and subscribe to my channel for more videos like this. Also, let me know in the comments what you think about these lessons or if you have any questions. Thank you so much for watching and I'll see you in the next video. Bye for now.